G'day everyone. Today I'm speaking with Matthew Quek, the co-founder and COO of GRVT, Gravity, a trading platform that kind of combines a centralized exchange experience with a decentralized exchange backend. Mate, how you doing?
Doing very well. Great to be here, Tom.
Thanks for coming on. Dude, let's just start with a quick background on you and how you got into crypto and how that's kind of led you to where you are today.
For me, I think my crypto journey, I guess my first exposure into crypto was actually, back in 2015, where I attended a talk whereby, by happenstance, Vitalik was actually speaking and explaining what was Ethereum, what were smart contracts, what was he trying to do and build the entire with the entire Ethereum ecosystem. So that's when I was still in college at that time, and I also just happened to switch from an economics major over to computer science.
Nice, good call.
I also so that's like kind of sealed the deal. Like I was like, okay, I'm in computer science. I understand a little bit about data structures. The blockchain itself is a new form of data structure, a financial data structure that helps to basically keep to have a online ledger, allowing people to trade and own their own assets. So I really bought into that vision initially, and then also basically bought a book and learned about the entire history about the cypherpunks, how did they come together, and learn about blending in cryptography into a payments network to create Bitcoin as we see it today. So that's a little bit about how I was first exposed into crypto. But I think my first, working journey, I first started in my career in the Singapore government, helping to build the National Digital Identity Project. So that's building what we call today SingPass as well as MyInfo. So I helped to serve as a project manager, program manager there, helping to write the funding papers, but of which also had cryptographic elements to it. The concept of asymmetric keys was also used for the key registry for governments doing representations of digital identity. So for me, that was a very interesting opportunity as well. After which I went over to a local bank in Singapore, DBS Bank, where I helped to look at or oversee elements of payment technologies as well as blockchain research over there.
Okay.
Yeah, so that's a little bit about my background.
Cool.
Yeah.
What was the book?
So it was called The Age of Cryptocurrency.
Okay, cool. I'm going to check that out. I need to read more books on crypto. I've actually read stunningly few books on crypto. I just spend all my time on Twitter when it comes to crypto. So I'll check that out.
Age of Cryptocurrency by Paul Vigna and I think Michael Casey.
Okay, cool.
Yeah, but that book is, I think it was written, 2014, 2015. So it's been some time since then. For me, it was very easy to read. Very, very great book too. Yeah.
So yeah, how did you come to start Gravity, and what led you to kind of look at that shift to moving things on chain?
Yeah, so for me, I think it first started with our co-founders. So I met actually Aaron, my CTO. He was my friend from college. We sat next to each other in advanced programming, building data structures as well as a database in C. And we became really great friends. And then back, sometime when I also met Hong through a mutual friend, and we came together and decided, hey, let's think about what's something that we need to build or we wanted to fix within the crypto industry. So actually, this was back in 2022 when we all came together, and this was right before actually Luna happened. So there was a small lending crisis within in 2022. When I say small, it's actually very, very massive.
Quite large, yeah.
Yeah, but yeah. So we saw Luna happen. Then after that, we saw BlockFi, Celsius, Three Arrows, Genesis also start being affected by the aspects of counterparty risk. And then finally in 2022, I think we all saw FTX go down, right? And for us, this really gave us the unique mission that we wanted to solve was to solve for counterparty risk, right? So for a lot of the lending issues, that was like there were a lot of uncollateralized loans going out, and when people defaulted, that basically created a large cascading effect on the entire industry, on the industry itself, right? And that basically brought us down for almost a year and a half, 2 years. But what we wanted to do was to create a platform that solved for counterparty risk, and we were identifying that the entire derivatives market would be the largest market going forward for crypto, right? I think we looked at it from the point of view of traditional finance. The derivatives market really is the largest playing market with trillions of dollars being traded every year. I think the equities market is about $200 trillion traded every year. For gold, you see about 10 trillion dollars being traded there. I think we can just double check on the numbers over here, but it is really large, right? So we decided to look at it and to create a platform such as Gravity, whereby we can create something solving for counterparty risk. We went live in December of 2024, so it's just been about 7 months since we've gone live, of which now we are trying to refocus and change things up a little bit. We have already gone live with a decentralized exchange, with perps offerings in the very initial stage. And what we're planning to do next is to start launching spot offerings as well as options, and a full derivative suite. But at the same time, what we have also wanted to do was to create a platform and let's say refocus a little bit on to what actually people want. And what we believe that people want in the current age is for wealth creation, right? There's a reason why everybody is in the crypto industry. The market moves quite a lot more aggressively than in some cases than the equities market, especially when you play in the derivative space. So we wanted to create a platform and a product where users can come in, sit back, invest their crypto into a wealth management or a gravity strategy, as we call it today, which are run by traditional finance or much more high frequency hedge funds that run maybe delta neutral strategies, directional strategies, and you can take a pick of what type of risk and products that you actually want to invest in. So that's a little bit about where we are today. We are also partnered. A lot of our journey came together with partnering with ZK Sync. We are built as a ZK Sync private Validium stack, and our goal in working with ZK Sync is to become the central liquidity layer for all ZK products in the future. We are already working towards that roadmap, and I think we will see quite a lot happening because there has been a lot of technological developments with the ZK team as well.
With GRVT, it's perps at the moment. You're going to be bringing in spot. I know that you guys have recently introduced the strategy side, which is allowing access to essentially like hedge funds or like high frequency trading funds that are like managing money on their own, and you can gain access to that. How do you see this shift of financial instruments moving on chain? Because there's a lot of like centralized products. And I know that you guys in particular are more like regulation compliance focused than like other quote unquote decentralized exchanges. Mm-hmm. What made you lean more towards like regulation and compliance side rather than just being like plug and play decentralized? Yeah,
so I think for that, I guess a lot of it comes from our background. Like first, I come from I worked in the government for a little bit. I was working in the bank for a little bit. Likewise for Hong, who came from Goldman, and then Aaron, who basically who came from Meta and Facebook. For us, I think we, all these, I guess our background came from regulated, data, and then now regulated banks, and then regulated digital identity, right? So for us, our perspective was that regulation firstly makes things safer, mm-hmm. And it's actually there to protect all users. In addition to that, regulation allows for more creativity or more growth and opportunity within the space. Obviously, without regulation, people can do whatever they want. But with regulation, the infrastructure, traditional infrastructure, starts to move. right? So that's why you're seeing banks like JP Morgan, banks like Goldman that have already connected to the blockchain or are running their own blockchains. We're also seeing many other products like I think it is X, Google that have also started to invest into stablecoin payments. The reason why is the regulations and the Genius Act that I think just passed last Friday. I guess I don't know when this will air, but like last Friday, it allows for a lot of traditional businesses to actually start moving towards, hey, let's look at what's next, what's new, what's better. Blockchain technology is is one of the best technologies out there, and is a technology that's created for financial movement and financial settlement. Of which I think this is where you see a lot of traditional businesses as well have started to invest in blockchain or exchange businesses, right? And then that's where you also see, I think Robinhood, like exchange like Robinhood out of the US, these have started investing in RWA, real world asset, tokenized securities companies as well, and start offering tokenized security offerings on their platform. We believe that this really is the shift. The direction and regulation really is pointing towards this way. So that's why we first started with the idea of, hey, let's go regulated so that we are future ready, future proof, and at the same time, that's how we managed to actually get most of the initial institutional catch right onto our platform. So today we have about 60 institutions already KYB'd with us. It has been continuing to grow, and there are many of them are trading and or getting set up to trade with us already. Because we are a licensed entity, we are also entity that follows very strictly by doing sanction checks, following OFAC sanction screening, and then we also do trade surveillance, right? So you're rest assured that when you're trading on Gravity, there is no tainted funds trading on us right now. It is institution trading with clean funds and retail trading with clean funds on Gravity itself. So if you are a traditional, financial asset provider or a traditional fund where you have to actually strictly adhere to these policies, like you are only allowed to trade on a KYB venue, this is where we come in. And also, in addition to that, we are our technology stack really functions very similar to how you trade on, like a Binance, a Coinbase, right? So you have that trade execution capability. You now have a DeFi access, access to DeFi, which is on a platform like us, and then you also know that your funds are safe. So that's a little bit of a long answer, but that's the reason why we went down the regulated track at the beginning.
You've actually brought up some good points there that I want to go a little deeper on. You talked about how, and this is something like, to a general audience that may not necessarily see the impact of blockchain technology, I think that's almost become a bit buzzwordy in the recent area, particularly like within the crypto industry. It's like, oh, blockchain, it's so good. But to like a wider audience, when they look at companies like Robinhood, Coinbase, moving and kind of shifting towards blockchain tech, what are the main upsides from, like an outsider's point of view? What are the big upsides to adopting blockchain tech for like fintech and financial firms in TradFi? What's the big unlock there that people could look at and think, oh, that's the reason that blockchains are useful? Is it just quicker settlement times, or is it more than that?
Yeah, so I think that's a question that, I mean, again, like I think there are inefficiencies within the traditional finance ecosystem when you trade on, let's say, the NASDAQ, right? Basically, most of your settlement commitment time is actually T+2, which is the moment you actually buy, and T+2 for people who don't know what it is time plus 2 days, right? When you actually buy a lot of these, let's say you buy a stock on Robinhood, the effective name change of, hey, now Matthew bought a stock on Robinhood, let's say I bought Apple, you can be sure that it will settle within T+2 days, and my name as ownership of the stock actually occurs 2 days prior post me actually purchasing the stock itself. On the blockchain, when you buy it, it can be settled basically the moment the block is created, which in some cases can be 5 seconds, in some cases can be 1 second, in other cases might be like 5 to 15 minutes, based on which chain that you're actually using. For the difference here is when during the T+2, within the traditional finance, which again might get a little bit more complicated, in fact, is that there are clearing houses that these exchanges or brokerages have to use, and within those T+2, who actually sits and earns the fees. Let's say if I bought a stock or a share, my money is sitting in limbo maybe for 2 days, right? Basically, the clearinghouse or the person that's running the exchange earns your interest rate for 2 days. That's why it's a very viable and very big business for this inefficiency, because the more I trade, the more my money sits in limbo, and the more that they are earning the float, basically, right?
Okay.
That's one element of it, which is why we believe that let's move everything on chain, and that's where we are able to offer more value. That the moment that there is instant settlement, we can pass a lot of this potential hidden profits over to the user to eventually say, if I trade, anytime that you trade, you can put it in a fixed deposit or like a treasury kind of note. Anytime that your money is not actually being used to trade, you can put it into a 5% year-on-year APY kind of fund, or you can put it straight into a gravity strategy, which is maybe run by an algo or hedge fund that's constantly trading, and maybe their projected revenue for this profit for this year can be something like 40%, right? And then if you want to actually take the money out, you want to take a directional bet on the market, you can do so, and then put it at the moment you end your trade, you can put it back into that asset manager as well, or gravity strategy.
Okay, and now I don't mean to shield a direct competitor here, but if we're going to talk about on-chain perps, we really can't go past Hyperliquid and the success that ecosystem has seen in the last couple of months in particular. It did appear to kind of come out of nowhere to a lot of non-perps traders, and even when the airdrop occurred, I don't think people really paid attention until that airdrop doubled, tripled, and then it was like, oh, Hyperliquid is the place for at least public non-KYC'd access to on-chain perps. What do you see as the main kind of drivers behind their success in capturing that on-chain perps market?
Yeah, I think for not so sure how I can answer that fully, but I think I can speak a little bit of the different rationalizations, or what they stand for versus what we stand for, right? I think a lot of this comes from, or success comes from, a couple other factors that if we really want to analyze, we can figure out all the things that they did well, and then they did poorly, and then go through from there. But I think for them, I think the mantra in the very initial stage was they fully believe in full decentralization and full transparency, and in that sense, they are creating the entire Hype ecosystem is created as a blockchain in a sense to house a lot of their financial products. What they do on their tech side is they run a public blockchain. So I think in the most recent James Wynn trading trade following, a lot of people could actually see his open trades, and when anybody takes a $200 million position, a lot of times when you bet against the market knows how to take wins out of you. So that's one of the downsides of having a fully open blockchain. Whereby for us, Gravity, we run on a private blockchain, right? Private Validium that was created by ZK Sync. For us, whenever you take positions on the market, your positions cannot be seen, and it functions in the very same way that when you trade on a centralized exchange, the entire field does feel that way. But for us, when you trade on us, nobody can see your position, so nobody can come in to hunt your liquidation, the liquidation price that you might be sitting on. For us, we also, as mentioned previously, we do believe in regulation, but mainly because of the fact that we believe in security and being future ready, right? We as a company will do what we can that's best for our users, keep them safe and keep all their assets secure. And that's one of the reasons why we also implement a username, password, OTP, and then for you to connect your crypto wallet itself, right? So you own your own assets, but we still gate it with traditional Web 2 type of security measures and controls. All these steps, are a little bit heavier on the user, but I think a lot of users, nobody has complained because they know the value of it and the value of security. I think for us, finally, we're trying to create a platform that is for user wealth generation and to be a self-custodial safe place for people to come in to trade. So that's, I guess, identifying the differences between Hyperliquid as well as us. In terms of their success, I think what they have done really, really well was they actually created a very large, massive airdrop. And they gave a lot of money to their early supporters, and that made a lot of their early supporters very, very wealthy. For us, we also plan to do something a little bit similar. We are giving about 20% of Gravity tokens to the community itself and directly.
Interesting. And like if I was to use, let's just say, me being an eternal opportunist, if I was to be using Gravity right now, would I still be participating in like the season 0 of Airdrop for the Gravity product, or has that window closed?
Yeah, so we started our Gravity point system. Today, when you trade alone, we have you will earn Gravity points, and that will continue to run up until we do our TGE. Obviously, do come and trade. We do reward our earlier supporters proportionally a little bit more. So for us, it is still quite early for us. So please do come on and farm our tokens and our points.
Okay, wonderful. I love it when people say, "Go, please farm our points." No. But yeah, no, the James Wynn debacle was really something. I do think that showed the importance of a little bit of privacy. But I mean, it's also, if you're trading $100 million plus positions and publicly telegraphing them, you're very much opening the door to being hunted. Yeah. But since then, we've seen, CZ come out, talk about the need for dark pools and anonymity when trading on chain. And maybe this is a slightly complicated tech question that may not land with the audience as much, but I'm genuinely curious. When you have a public blockchain like Hyper EVM, where you can see all the positions compared to like an anonymous or like dark pools or like an anonymous blockchain, how is it that you anonymize the transactions? How is it that you then make it so that the members of the public can't just go on a block explorer or a dashboard and look at it? What are the steps that you take there to be like, oh, actually, we're gonna have our data, but we're gonna put it behind something? So
actually, the concept of dark pool has existed within the traditional finance space for quite some time now, right? In essence, everything that a lot of the products that we are building on chain today is utilizing the concepts of what is currently available in TradFi and to do it on a much better settlement platform, which is on chain itself. In terms of the tech itself, what a dark pool is basically like a blind auction. Somebody on the buy side or on the sell side can say, I want to sell, let's say, 100,000 Bitcoin. Somebody on the buy side will say, I put in an order at this price to buy 50,000 Bitcoin. Let's put it in a blind auction, and then I can post as many times as I would like in terms of a set range that I might want to trade in, and then see whether it hits or not. Basically, it is the concept of a blind auction, which then doesn't allow won't publicize that, hey, anything was traded on this price. So it doesn't affect the market in that sense, right? So for example, if anybody comes on now and puts in like, hey, I want to sell 100,000 Bitcoin, the amount of supply in the market that definitely will increase, and then as with economics, that will definitely drop the price for everybody else, because of the no increase in demand doesn't mean increase in supply with no direct increase in demand doesn't change the price. So dark pools help to facilitate a lot of these large transactions without publicly announcing that trades are occurring. How your question actually was asked was, how does the tech work? Is basically, you basically look at potentially a blank screen. You put in your order, and then it replies you whether you hit or not. And if you do hit, you do have to pay. And then for us, this is something that Gravity can do because of our current technology stack and our technology capabilities. But basically, what happens is that for example, if Gravity were to do it, and we have it in our roadmap, we'll create a smart contract whereby the user will deploy the buy asset, and then the other user will deploy the sell asset into that same smart contract. We'll send it across, but we won't publicize this trade information to anybody else, except for the two parties. Yeah.
So there wouldn't be an order book in this scenario. There'd be no order book that you could see the actual trades in.
You won't see anything. It's basically like it's basically like if you talk to ChatGPT, I want to buy this, and it says okay, done. Yeah.
Okay.
And then at this price, then they will either tell you, sorry, you haven't been matched, or yeah, okay, you've been matched. This is how much you have filled. Yeah.
Okay. Awesome. All right.
But this is more in very simplistic terms, right? Obviously,
hey, listen.
Yeah.
The ChatGPT analogy, I'm sure, will hit of like, do this, thank you, okay, no one else knows, fantastic.
Yeah.
I would like to know what you think at the moment are the most important themes in the crypto industry and how things are panning out. We've obviously got a lot of noise at the moment. We've had the big beautiful bill come through, Genius Act, stable coins, RWA, tokenization of this and that, meme coins. It seems to be all happening at once. What are the key areas that you look at right now and think, yeah, those are probably the most prescient for people to know about and focus on?
Most prescient is obviously Bitcoin price. I mean, high a couple of
I like that answer.
100. Yep. I think it hit 123K. We're basically on the road to go past, I think, 125, and hopefully we'll see it 150 sometime this year. Most of the time, I think market moves November, December. For retail especially, that's when holiday season comes out. Everybody talks about it. I think the telltale sign for most people is like if my mom or my aunt is talking about it, that's when I know something like let's all pay attention to the price movement, right? So I think that's number one. The most easy to talk about. Number two probably would be on the more infrastructure side, right? Because a lot of investments going into infrastructure does eventually roll up into in multiples to the market itself, right? So I think we've seen exchanges like Robinhood, a traditional exchange, invest and buy crypto products and a crypto exchange as well, and then start offering tokenized securities. So you're seeing TradFi go into crypto, right? We have also prior to that, we also saw the issuance of the BlackRock ETFs, the Vanguard ETFs that have come through. So now institutional investors can get exposure to crypto on the stock market alone today, right? So your brokerage like Robinhood is also going down that route, but in the vice versa as well, right? You're seeing exchanges like Kraken, Coinbase. Kraken started also buying traditional finance technologies as well, and products as well. So eventually, I think we're going to see a meld of both worlds, a merge of both worlds, whereby on Robinhood you can buy your Apple, you can buy your Bitcoin, you can buy your ETH, your Solana, and then likewise for Kraken, you can go onto Kraken, or like for us as well, for Gravity, down the line you will be able to come onto Gravity, you'll be able to buy your Bitcoin, you will be able to buy your ETH, Solana, and then eventually Apple, Facebook, and all those FANG stocks, or or whatever equities that you like to buy as well, right? So I think we're seeing a merger of those places, or these two largely differentiated realms of Web 2 versus Web 3 in terms of finance. And then I think also we are going to see a lot of crypto payments coming out in the near future, right? You're going to be able to eventually use your Bitcoin, ETH, Solana, or yes, USDT, USDC to start spending. The easiest way, which I think is already currently available, is through your credit cards, right? You can still spend and pay for a lot of the things that you buy, be your groceries, your iPhone or whatnot, but your settlement currency will be in stablecoin. What's great about stablecoins today is the fact that you can have access into stablecoin yield much more easily than you can get yield by going through a fixed deposit at a bank. I can immediately deposit, let's say 1,000 USDT into a treasury note backed stablecoin protocol. I might get between 4 to 5% or whatever's the interest rate the treasury that the T-bill is giving out today, minus a couple bips. But today, if I want to use my USD or SGD to buy maybe we scrap out the SGD, but like USD to buy any to buy any product, I just put in a fixed deposit, which maybe locks me up for a month, and then if I need that money, I have to wait till the end of the month to actually withdraw it, right? If, for example, there is this efficiency which all users, such as our retail users, such as ourselves, have access to, I think that's the best product, right? Today, all of your money sits at the bank. Who's actually earning that interest rate is actually the bank, not you.
Yep.
Yeah. So I think that's one of the modes that for you to actually look at, and I think stablecoin payments, it really is a lot more efficient, and if just know that your buying power can be 5% more or 3% more year on year, right? So if you spend, however much, in every 2 years, basically you could, based on your buying power, you can now get a new iPhone for free. Like, why not just take it?
Yep. No, that is one of the big things with stables that I think people... the stablecoins narrative is very much catching on now, but for a long time, I think that was the promise of like, hey, listen, you don't have to actually invest in T-bills or like have a fixed deposit, where you lock your funds up for 90 days with a bank. You have immediate liquid access to US dollars in a protocol, earn interest on it right now. Obviously, you want to keep it in there for a long time. I almost feel like that friction, the lack of friction there could be a trip, like a little tripwire to like the actual compounding gains of the USD, because people will move it around so much. But no, that raw efficiency is one of those big unlocks that you just think, once you start doing that at an institutional scale, entities with hundreds of millions of dollars being able to slap, 9 figs of USDC or USDT into a vault and be like, I'm just going to leave that there. Yeah. What do you see as kind of like the biggest like news, like headline events that have been occurring right now? And why do you think that they actually matter in terms of like industry in the long term, and what's their main impact?
Yeah, so I think for us, with the Genius bill being passed, stablecoin payments will become a lot more clear about what people can use it for. I think on June 6th alone, we saw Apple, X, Airbnb, and Google join other big tech firms in exploring stablecoin adoption, right? So, I mean, I think a lot of people use Apple products, your Apple Pay. A lot of people follow Twitter. A lot of people also need Airbnb to when they move and travel around. If, for example, stablecoins does facilitate a lot of these your ability to transact on these platforms using these services, definitely will play a very, very big role. This year alone, we saw a lot of IPOs for crypto type products, like I think Galaxy, one of them. I think Amber is another one of them. And then we are seeing a lot of M&As, right? So the TradFi, as well as the native crypto exchanges, as well as TradFi exchanges or TradFi businesses are buying each other up, right? So I think we saw Kraken buy or partner up with Bakkt, stablecoin or tokenized stock issuer. We have seen JP Morgan Kinexys partner up with Chainlink, as well as Ondo Finance. We also saw in May Robinhood developing a blockchain-based program to trade US securities in Europe down the line. not to mention there was also the BlackRock ETF last year, but there is definitely a lot of money from crypto from TradFi going into crypto, and for crypto OGs or like a lot of the traditional businesses going back into TradFi and to create this sort of products for I guess all of us to buy.
That leads me into like a next little interesting tidbit. I kind of like to round out the show. It's a broad question, but if you had to pick an asset or a sector on kind of like each side of the coin, what is it that you're most bullish on and most bearish on heading into the rest of the year or the next 2 years? As long as the time frame as you want, but if you had to choose, it could be one, multiple. Like what are the main things that you look at and think, yes, I'm bullish on that, and then on the other side of that coin, what do you look at and think, yeah, bearish?
I would say, for the most bullish part, like as I mentioned just now, is on Bitcoin price. Basically Bitcoin leads the entire industry, and it has already proven itself for its store value capabilities of its chain, store value, and then also transaction of value. Right, you don't need to do 1 billion Bitcoin payments a year, but the fact that you can move 10 Bitcoin around, 100 Bitcoin around, 10,000 Bitcoin around for the same cost is already very valuable. And with the price of Bitcoin going up, it just proves that store value and then the transference of a value has already that was its thesis, and I think it's definitely hit the nail on its head. Now in terms of other chains, maybe what you need to evaluate, and the more not say bearish portion is with a lot of things becoming more mainstream, you really need to understand what's the value of the chain itself, and what is it trying to solve, and then then start looking at more of the fundamentals, right? Who's actually using the chain? What is it the chain actually being used for? How many settlements are occurring on this chain? And then what's the growth value, or growth prospects of the chain itself? It's more of think about it more in a structured framework. What am I going to use this product for? What's the value? And then what's the propensity for growth apart from just the price? That's how I probably would think about answering that question.
Nice. No, that's good. Bullish Bitcoin, bearish probably a lot of altcoins that have very little
well, I would say
PMF
just
outside
make
of
your own evaluation, do your own research, and then bet on your own thesis, right? If it does make sense, then I think if you can convince other people based on their thesis, then that's probably value. If you cannot, then I think just use your evaluation. It's
been really good having you on. Where can people find you on socials? Where do you want to point people towards? What should they go check out?
I'm one of those people that manage the Gravity Twitter page or like X page as well. So we are known as Gravity _IO on Twitter. If you shoot me a DM there, it's most probably me that will respond. Yeah.
Direct access to founders. Good.
Yeah.
What did you want to point people towards? What should people go do after they've watched this podcast?
I think just to go check out our Gravity strategies. I think for one of we went live with it last week. Within 3 days, I think one of our vault managers was already up 8%. I think it's a very easy tool for you to come in to use. And I think for us, what we try to do is to showcase as much transparency as possible. We also have an introduction of the vault manager. I think one of our vault managers is like we have this cute little meerkat, like a AI generated meerkat that is telling you what and how his journey into crypto and trading was, what is his strategies that he's taking, and we do this likewise for all of our other vault providers. Like I think we have Rogue Traders there, we have Science List there as well. We have one of our KOL partners, Miser, there as well. So and then we also have an AI led directional fund that's also available for you to actually come in to trade or to invest your money into and then for it to trade on your behalf. We believe that Gravity really is we're trying to be a wealth management, wealth creation kind of platform. Let's find a way to work together.
Awesome. Matthew, dude, thanks so much for coming on, man.
No problem. Thank you very much for today. It was a great conversation.